we have with us Andy Ridling. He's the Director of Business Systems, or is Business Solutions, or is it just BS, Andy?
It's BS.
With the Hess collection. Our plan is to very quickly, out of the next 5 to 10 minutes, kind of just highlight the problem solution benefit that we've gone through with Andy, working through price management, and ultimately the use of that data in the Target Business Intelligence Suite, the benefits that he's receiving. So kind of high-level stuff, a few PowerPoint slides, but then really get into the demo of what they're doing, how they're doing it, and what kind of impact it's having for Hess. Andy, before we actually get onto the problems, you've been using Target, the Business Intelligence Suite, for a while. Why don't you give a little bit of background about how you've been using that, and then where we got into, how do we get into this thing with pricing management?
Yeah, so I've been a Target customer since 2004, and we started out mainly just for depletions. We had old pivot tables to do depletions, and we subscribed to a data source to start getting our depletions electronically and loaded them into Target. And as the years have gone by, I met Doug a few years after that. We started doing a lot more, our shipments, inventories, GL reporting. So it's become our main reporting and BI tool here at the winery. So knowing that, we had a challenge here internally. Our CEO had come on board. He'd been here about 6 months or so, and he came to me with a question about our spend. How do we track our spend? Where's our money going? Our costs are exploding for pricing and promotions, and our volumes are not growing at nearly the same rate. And he wanted to know where the money's going. And I said, well, just ask finance. They know where it's going. And he says, well, no, I need to know at the level of by item, by distributor, by deal type. And so it kicked off this project of, well, how do we figure this out? Well, we had no visibility into our pricing. We had to ask individual sales managers what the pricing was in a territory. We had no control over what they were agreeing to with the distributors. We had no central repository of the deals. We had no way to measure the spend in any way. We could see what we spent every year, but we couldn't do anything about it. It was already after the fact. And then we like to joke about crimes against the winery. We had deals that were unsustainable. We're actually losing money on certain deals, and we had no way of even knowing where it was. So the whole thing was just unsustainable. Our CEO wanted to figure out what was going on and wanted to make changes, so he came to me to figure this out. So I mean, that was the problems, and so once we started addressing the problems, go ahead and click forward, Doug, we had to, first of all, collect the pricing from the sales team. So our first cut was to get them into Excel, which that's pretty common, I've found with other wineries and beverage wholesalers. To get them into Excel to at least get some sort of framework built of how the pricing looks. So we had our sales managers go for each distributor / state. Some states have multiple distributors, but more often than not, there's one per state. They had to collect for every item the pricing for that state and put it into Excel. That was the first step. But being that I'm very aware of how databases work and the importance of master data and data warehouses, I knew that we had to get this into some sort of central repository to ever have any intelligence discussion around pricing. So that's when I contacted Doug to start this project of building our pricing management portal. So Doug, I don't know if you want to jump in and talk about your role in this.
Sure. Well, this Excel thing is, this is a grid that we see at multiple of our target customers. You're the first to really take the bull by the horns on the pricing side. And it came down to, you came and said, hey, we really need to be able to see where our margins are. And ultimately you're trying to figure out, how to make a better impact with your spend, be able to have conversations around things. And I think, cell here, C42 was the driver. How do we get a weighted distributor margin compared to your margin and try to balance all that out? And so, as you talked with us, you were talking about other solutions that existed, and, some of them might have been sort of Excel on steroids a little bit.
Yeah. We wanted to do our due diligence and figure out, is this something that's been done before? Are other people doing this well? Is there a quick solution? Not necessarily quick, but is there a good solution out there that we could just subscribe to or whatever. And we looked around, poked around. We found that it was either too expensive or it wasn't really worth what we were trying to get to, because our whole end game was to how do we use Target to figure out where the money's going and everything, and we had no way to connect that to our ERP system. So we wanted to drive everything through the ERP, which then feeds into Target, and so we figured it was best to build our own system utilizing the resources of Business Impact to do it well, because we, again, had history and we know the work that they do. So that's when we decided to kick off our own portal and our own system.
Well, I mean,
and the whole idea, I mean, some of the pain points that I do want to touch on, it was really difficult getting the information from the sales team to start with. It was extremely painful. And I always talk about, we had 3 different types of sales managers. There's number one, that they didn't know their pricing, which is dangerous. There's a second type that they know their pricing and they do not want us to know the pricing here at the company, at the winery, and which is dangerous in itself as well. And the third type is people are just too busy. They didn't want to take the time to sit down and collect the information. So collecting it was painful, but as we've moved forward here and had the portal access, which we call it the PMP, Pricing Management Portal, but it's really just our repository of pricing. Go ahead, Doug, if you want to.
Sure. Well, this is, and this is actually not Hess's, of course. We've changed the names and changed the numbers to protect the innocent. The distributors, of course, are real, because they're the same distributors that, not only do you use, Andy, but our other customers use and are used across the country. The idea here was that it needed to be simple. It needed to be Excel look and feel. And, the first part of this is, not only was this about collecting your pricing, but it was about being able to use that pricing information in some way to make better decisions. And, as we tried to talk about an ROI on this, we talked about, well, getting the pricing will make a difference because it'll make people aware of their pricing, but it'll be the collection of the data and the use of it through the Target BI tool later that will really drive things. But let's take a look at how we collected it in the first place. Well, why don't we start here with Colorado. First of all, it shows you all the current active deals that are in place. We could go to deals and just run it by product, but in this case, why don't we pick it by distributor? But in here, every product, every brand, as most people think of it, label, it's not vintage specific, is going to have a list price and is going to have deal pricing with it. This will be from the price to the retailer, whether it's at a case price or at a net bottle cost, whether there's DAs with it, any particular deal we can open up, and it will pop open. It'll give us the terms or the dates of the deal. For you at the Hess collection, fiscal year was important. We can go down to date level, but you guys were like, hey, it's going to run from month X to month Y, typically for the fiscal year. Here, go through these other terms here, Andy.
Yeah, so every item has to have a frontline / list price. Everybody in our industry knows that that's usually false, but they have to have a starting point that the distributor uses as a frontline price. And on that frontline deal, that list price deal that we have set up, is where your FOB lives. So you enter your FOB of what you're charging the distributor. The laid-in cost is calculated by taking the freight and tax for each state. That calculates your laid-in cost, and that's what distributors use to determine what they're paying for the wine. They put that all in their top line. And then you have your price to retailer, which is what the retailer is going to be paying for this on this particular deal. And then there's the different deal types. So in certain markets you have SPAs, which are one way, and then there's the DAs, which are depletion allowances. And the depletion allowances are what we care about most in this system. We do have an idea of how to connect the SPAs for invoicing as a secondary level, because there's only a few states that do that. But the DAs is the most important part. But then you have your suggested retail, which is for that price point or that price to retailer, what the suggested retail price would be. And the percentage of business has always been a bit of a question mark, because it was, for a while, we had to kind of estimate how much business was going out at this price point. But we had no way of really knowing without the distributor telling us what that was. And, we all love distributors. They're all nice people. But we wanted to know for sure how much is going out at a particular deal, which drove this project to begin with. And that's where the invoicing comes in. But the checkboxes at the bottom are an important piece as well that we added after the fact, because we wanted to know how to segment our deal types based on channels. Certain states you can't channel price, so you can check all, and it will apply to all deals, or all channels will be applied to this. You know what I'm trying to say, sorry. But for there are certain instances where you can channel price, you only want to check the ones that matter for that price point. So is it your on-premise national account by the glass? Is it your on-premise wine list? Is it your off-premise chain price? Is it your military price? For whatever deals, or for whatever channels it applies to, you check a box so that we can then segment that later to determine how much, what are my deals, show me all my deals for my on-premise national account. So when you're dealing with national accounts, they all like to know what the pricing is for every state, so you can just run them a list and say, here's all the pricing for every state for this particular item, and it's just an easy way to segment those deals. So that was important to us to get to as well. But so where we're going with this is all great. This is a nice repository. This is a reference point. Anyone can log in here and look at the pricing by state, by brand, by size, by, you can filter any way you want to go. But what we cared about the most was how do we manage the business using this information. So we built the invoicing side of this, where we actually will pay our DA invoices through this system. So go ahead, Doug, and start one of those.
Sure. So we're going to click on Enter DAs here. These bills typically would come into your AP, Andy. And
yeah. So beforehand, what would happen is actually the sales managers would receive the bill. They would handwrite on the bill how much money goes to what particular item. Sometimes they would just straight line it across, 20% here, 20% there, 20% there. There was no real control over how they managed that. There was no quantities associated with it. So what we're doing, and then they would email that and or fax it to our AP clerk. She would then create an invoice in the system and pay the invoice. So a lot of man hours spent just creating the invoices themselves. So what we've built is, go ahead.
And those invoices are going to get created this way as well, but as you did that, it didn't necessarily capture the deal level. It didn't always capture your label level. Sometimes it was only at a brand level, and this is going to do something completely different for them. So here we're going to create an invoice for beverage distributors, and this is going to memorialize the crimes against the winery, right?
Correct.
So we'll put in the date here, 21, 2015. And one of your hopes was that this would speed up, because you wanted to automate this, and this was really a first step. Ultimately, you'd like to see invoice level data coming through and actually automate through, and that'll be the next step off of this. So.
Mm-hmm. And so the due date is very important. That will actually drive, we use Navision as our ERP system. That will actually drive the invoice date in Navision. So when she runs I want to run my checks for the week, it's going to auto collect the ones that she thinks should be paid now. So that date is very important to this process. So as you're entering an invoice here, and anyone working in our industry who knows about invoicing has probably seen some, they're pretty long PDFs usually. You've got a discount rate, you've got a DA amount, or a price or something. There's always some indicator of what deal is being used. And we've given the sales managers the deal description field, which is a free-form field, that they can type in what they think the deal is, so that they have a reference point that, oh, that's my Safeway, or that's my on-premise by the glass, that's my particular account, here's what this deal means to me. So that when they're paying the bill, they have a reference in their mind of what they're looking for. And then you enter the quantities that are actually being depleted at that price point and being billed into the field there. So there's an actual quantity associated with what we're paying for. And as you're going along, we decided to have the sum at the top so that they could. So go ahead and talk about the finance aspect of that, Doug. I think that's important.
Yeah. So one of the things that we've gotten pushback about this is that, hey, one of the nice things about the other pricing systems was that it was great. It gave us better access to the pricing, but finance is a very detailed thing, and having sales managers put in this kind of information, how can you be sure that it's going to be right? And so first of all, it had to be easy to put in because it's just coming off of a spreadsheet or off of a PDF. And then the second part was there needed to be some kind of check some way to look at the top of the invoice and say, hey, we've got the right numbers as we go through here. Now, the process of sticking it or integrating it with the accounting system can be two-step or one-step. It can be two-step in that it feeds the accounting system and then finance gets to check it off, or it can be one-step in that it goes straight through, and if there's a mistake, finance gets to correct it. We've found that that's a nice to have because some people don't want it to auto post. Other people really are, hey, if we're automating this, let's let the sales managers be responsible for themselves. What's been your feedback here at Hess on that?
Well, at Hess, we allow our sales managers to manage their own budget and manage their own spend. So they have full access to spend against what their budget and what they think is right to do. So they verify that everything's accurate. We started out, we auto-posted the DA invoices, but it turned out that there were a few errors every once in a while. There's a lot of questions about, they had to unpost and then start over again. So we determined that our AP clerk should take a quick look over and just make sure the numbers look right before we actually post the invoice and pay it. We allow, there's a lot of freedom in our sales organization too. This is their budget, it's their plan. It's our job here to analyze the data, and we'll get to that once we get over to Target. But it's our job to kind of look through and make sure things are looking good, and then bring it to their attention. So we have a pretty good separation of needs there.
I don't know if you saw that there, but there's a deal for Target, wrong Target. So I'm going to submit this invoice, Andy. I've scrolled all the way to the bottom to make sure that we've gone through the entire bill. I'm going to click submit.
And that was by design. We wanted to make sure that when they do submit, they really mean to submit. They can save and go back. There's other things they can do at the top there as they're going along, because sometimes you get interrupted when you're putting through an invoice. But then here, once they submit, they have until that evening to unsubmit. So if they made a mistake and they realize it a couple hours later, it's a batch that we pick up every night in NAV to collect these invoices that have been submitted.
And they can always come back and view their invoices, but we're going to see how they see them in just a few minutes in Target. The reaction that you told me about with your sales team, Andy, was that your team thought this initially was about as cool as licking the undersides of subway benches. They thought it would add more work to their plate. It didn't matter how much convincing I tried to do. They felt that handwriting on invoices was more effective use of their time for whatever reason. So after many, many hours of trying to convince everybody, once we finally launched the invoicing function in the PMP, the first phase was we just needed to collect the pricing. So that took us some time to get the deals into the system, to get their adoption of actually looking at the interface. Adoption was the biggest piece in all of this. Because if we didn't have a champion there, we didn't have adoption there, it didn't matter what I did to try to convince them it was important. So getting them adopted in here, and then we set the invoicing up, where once they were ready to put the invoicing in, one of my staunchest critics, a good friend of mine here, we've worked together for 12 years now here. He's our Eastern Zone Vice President of Sales. He's always been the loudest critic, and in a friendly way, but always busting my chops about this. So I finally said, okay, well, why don't you get an invoice, email it to me, let's get on a GoToMeeting, and let's put it through the system. I'm just going to show you what it is, and you can give me your opinion. He's always my guinea pig because he's going to give me an honest opinion. So we started entering the invoice. I put some quantities in there. I went down line by line, and he stopped me mid-sentence as I'm going through the invoice, and he said, you know what, this is amazing. And since then, that was the adoption, and he could drive that down to his team, and it's been an important turning point, and we have not had an issue since. And actually what it drove was his next question was, well, when can we do all of our other invoicing through here? So, which he didn't realize that we were already planning that function, because I'd thought a step ahead thinking, well, this is so easy to do here, why don't we have all the invoicing go through here? So with the distributors, we pay for, we pay for samples, we pay for printing fees, POS materials, all kinds of other things. And so we determined that it was important to have the other invoicing in here as well. And it drives just the same way as the other one does. But there's different categories for things we support. So promotional wine, printed materials, free goods, incentives, things like that. So they can enter those amounts in here as well, and they go to NAV too. So I don't know if you want to touch on this more, Doug, but. Yeah, well, the big difference here, of course, is that you may not have it to a pack size or to a bottle size. It may only be to a brand, or it may only be maybe do a brand and a label. This list is configurable, so if you've got other types of expenses that you decide later on that you want to add, we can come back to it. But let's go ahead and stick chain demos in here for 125.
And every single one of these expense types ties to a GL account. That's the important piece.
Yeah, and so we'll add another one here. And so if we pick samples, we'll say 300, and then we can say Americano and Malbec Blend and Kroger. And it's got the same thing. It has a checksum at the top. You put in the invoices and it goes through. But ultimately, all of this is a means of collecting. It's useful to have a repository of your pricing, just for, what are my prices on Chardonnay across the country? What are my prices on Cabernet? What's my best by the glass? But it all comes down to how do we get to use this information. So now,
so anybody who uses data knows that data is great. We all use it. We all love it. It's important to have. But there's a time where it's how important is it and what are you going to do with it? And so our whole end game here was to get something out of this. It was great to have it. So for the sales side, they wanted a tool to be able to see their pricing. That's great. So they could reference it. They know what it is. The finance side, we wanted to be able to collect the invoicing and say, okay, this is how we're going to pay the invoices. It saved our AP clerk, 25, 30 hours a month. She's freed up to do other things. So that's all fine and good, and that's great. That's been a great benefit. But we wanted to see what it's doing and what our business actually looks like by collecting this information. So that's where Target comes into the equation.
Now, Andy, before we get started on looking at some of the DA information, I've mocked up a couple of your dashboards. You guys have been such a successful Target user. I thought you might want to walk through. This is the Target Anywhere client. This is intended for web usage, iPhones, iPads. There is an actual mobile app, but this renders nicely. You can see here. I'll pull this up, and from here. It's because you guys changed your fiscal year, so this is mocked up data, but it's still based on your fiscal year. So we will pick June 30th. And so everything in Target has different kinds of rendering. They are interactive, so if we were to pick a particular product, or we can scroll down here, I'm guessing red means it's a bad thing, you're almost out. Green's good because you got some inventory.
Yeah, so you can click around. So in some basic Target functionality, you can drill onto any one object, and it will change the object. So if you go ahead and drill there to any one of those, Doug, it'll change the look and feel here.
I think you have drilled.
Yeah, there's some triggers in there. Yeah, yeah. There's a lot that Target can do, and I'm sure Kyle at the end will kind of recap. And if there's any questions on Target use, I've again been a user for, I'll say, 11 years now, because it has been. And so anything in a real-world scenario, I'm always available to talk about Target because I love it, and I will sing its praises forever. So that was not being paid for. I didn't get paid to say that. So, but it is that good. It's a great tool. So anyway, so we use Target, like I said, as our main BI and reporting tool.
Yeah.
So we wanted to have the pricing data. Yeah. Those all have triggers. Yeah.
Yep. That drill down in different ways to different places, and some of those are shipments, some of these are depletions, and of course people are very familiar with it. I'm going to click over to, wrong one, to documents. We'll open up our first DA, or depletion allowance here, our dashboard. And here we might be looking at DAs that come in by product and brand. We can see the actual deals down below. We can see our divisions or our regions over here on the side. And this is the part where Target does get kind of fun. If I say, hey, let's look at my California region, when I click that slice of the pie out, everything else is going to filter on that. If I click on Malbec down below, I can see what's going on with Malbec. And I can see, well, this is kind of weird. I can see I've got quite a bit of Malbec in California going out on a 2-case deal, 3-case by the premise. But then I see my Safeway deal, and I've got a huge amount. In fact, I have more than I even had depletions for. So one of the things that we're doing in the data warehouse in the Cube and allowing Target to do is visualize where you've actually been charged more cases than you actually saw depletions for in that period. Now,
yeah, and there could be various explanations for that. Sometimes it's timing. They might bill you a month later for something they depleted the previous month. There's certain things like that. But you would look for anything egregious like this. I mean, if we ever saw 81,000 in the red, that would be worth a phone call or two. But, but if it's a case here or there, it can be a rounding issue. But it's important because one of our big things was we wanted to see how much was on deal. So we want to know not only what deals are on, but the first cut would be how much is actually on a deal, or how much are we getting full price for versus what's supported. So that's the difference in list price. So everything that is not supported will show up under list price because we assume that it's being sold at full list. And now we know that's not true with the distributor. They have multiple deals that we don't see. And we do have the ability to put those deals in our system just for reference, but there's really no way currently until we have invoice level distributor data to find out exactly how much is going out at each of those other deals. So we don't know what their true margin is, and we don't know exactly what other deals are being sold at. So we just have to assume that everything that isn't on deal is at list for our purposes.
Right. So this is just a dashboard. I'm going to click over to the client now, and I'm going to pull up Safeway here. So one of the deals that we were kind of playing around with is that you guys at times will, because business entities cross state lines, but they like consistent pricing so long as it's not one of the states that doesn't allow channel pricing. You might set a specific deal aside for them by product or by brand. And so here's an example we can see. Here's what was charged against. Here's how many actual were depletions to Safeway. I've been able to select Safeway as a promotion and as an account. And down below here we can see, for instance, that the Meritage product, the red blend, is got 829 depletion allowances charged against it. There were only 48 cases depleted, and so that certainly would be worth that phone call or two as well.
Yeah, because if you set up, so for some national accounts, you set up specific pricing for them, and it's only for them. So it'd be good to know that if anybody else is buying at that deal level. And if so, there might be a similar deal that the distributor has in their system that should be being sold to that other retailer. Because a lot of times you'll work out deals with particular accounts to give them special pricing so they're the only ones in that market to have that price. And so it can cause some grief if other people are buying it at that price. So it's, it's just, again, reference. It's something to good to know and make a phone call and figure out what that is. And that's at our winery, that's the sales manager's opportunity to do something about it if they think there's a problem. But again, it's just good to know.
It could be that the distributor is taking advantage of the deal, and I'm not suggesting do this.
So yeah, one thing we assume
to buy on it.
Yeah, we assume that a lot of that happens with buy the glass. Buy the glasses tend to be the deepest deals we have, and so our big push is to figure out how much is going out of buy the glass, because we want to make sure that if on premise is a certain number being depleted, we want to make sure that we're not doubling that in DA quantities. It's important for us to make sure that we're maintaining brand standards and things like that.
So I'm going to switch this over to net DA margin. Ultimately, this is the goal that you had, was to figure out where your margin was and where your distributor's margin was as much as possible. Again, realizing that until you have the actual invoicing that shows the actual price out to the retailer, it would be difficult. But at the top, we can look at it by state. Down at the bottom, we're looking at it by product and by and label. But if we were to pick any particular state, again, the power of Target, here we have a situation where Georgia is showing that you're getting decent margin, where, technically decent margin, we've got a little green, but they're doing really well, so maybe they're hurting the retailer. What products are in that market? And we could even go to deal level if we wanted to, and to change this out and to see which deals they are actually working at.
And again, distributor margin is always going to be a relative discussion, because they might say, well, actually, I'm really only at 45%. And even that's pretty good. So,
yeah,
but it is relative that when you look at your support to the distributor, you're paying them to sell at that deal level. if they're taking advantage of you, if they're at 78% margin, even if it's 45% margin, that either means they're not charging, or they're charging more to the retailer than they should be, and also charging us, billing us more than they should be, because we're supporting at a higher margin than we want to support at. So the typicals, they want 25 to 30%, across the table. So we always want to try to maintain that level.
Well, I mean, and Target's so easy to use. I mean, for the analyst who would like to actually drill into this, and maybe not necessarily the VP, but someone who's an analyst, they could always right-click, copy this, say I don't want to look at it by product, I want to look at it by promotion type. I can put the description in here. And so now I have this here, and I will put that there. And if I pick Cabernet, I can actually go down to the deal level and see where the spend is and so on. And so in this case, it looks like most of them came through at list price. So that's why it looks like such a high margin for them. So
again, these numbers wouldn't ever really look, that's not really close to reality, but the idea is, the idea is it gives you some relativity to what you're making to what they're making. So
the last one I wanted to show here, because the key of all this was the percent of business on each deal. So if we go back to the spreadsheet here for half a second, here were the deals by the glass, quantity, different by the glass deal. And down at the bottom, these were estimates of what the percentages were that you were expecting to go out on each of those deal types.
And some of the distributors were very, very accurate with that info, but a lot of it was guesswork. Either our people guessed or they asked the distributor and they guessed. So it was kind of a fictitious number.
So from here, if we pick a distributor and follow the directions that are plainly written here, let's go ahead and pick California. And then number 2, let's pick a product. Let's pick Malbec blend. Well, that's not got a lot. Let's pick a white blend. We can actually drill down and get to the deal, but also the percent of business on that deal, and even have it visualized for us here. So if we decide to change and want to look at how white blend is doing at other states, I can actually drill back and see the other states that it's at. So the drilling works in multiple directions here. So again, kind of a nice power of Target. Now, what is the goal for Hess as you now have the actual data coming through your system?
Yeah, so what we're doing this current fiscal year, now all the invoicing is being processed through our PMP interface starting July 1. It was a requirement. So they had half a year to get familiar and go market by market and start doing it that way. Well, the deadline is July 1. They start invoicing everything through the PMP. So our next task in my department, the BIS department, is we're going to pick 6 states this year because we feel that's a consumable amount, and we're going to do a deep dive on each of those individual states to understand their pricing to the consumer level. A lot of times we get caught up in the distributor-winery relationship that we forget that people are actually pulling our wine off the shelf or ordering it on a wine list. So we want to start there and do some surveys in the market that we're working with to determine what the shelf price is. And then from that, determine the retail price point and the retail margin to understand retailer margin, and then look at what deal that we're supporting and what margin the distributor's making and what margin we're making in that. And then make suggestions to our sales teams to figure out a way that they can start optimizing their price / sweeping the pennies. A lot of distributors want to stay with a margin. I want 25 points. I don't care. And so we ask them, then why are you giving them $7 even as a DA? If they want 25 points, that's $6.83. So you can have the discussion about let's optimize the price to the best point. And we want to partner with our distributors to make sure that we're all whole in this, that we're not trying to take something from them. We just want to be better and more intelligent on how we're managing price with them so that we're all capturing the business that we want. We don't want retailers having an 85% margin. We can increase, or the distributor can increase their price to the retailer and we can actually minimize our DA support at the same time. So we want to work with them to get these things accomplished. And that's why we don't want to start big. We're not doing it with all 50 states. We want to start with a consumable amount the first year. And then I think as we get smarter and we educate our salespeople to be better pricing managers, it will help that ongoing, that when we're planning price all the time, we're always having those things in mind. So go ahead, Doug. This is an important slide here.
Yeah, so as we went through this whole process together, the end, you begin with the end in mind. And we talked because we helped you with your data visualization and your data warehouse and making targets and integrating that and architecting it. But ultimately, it was about money for the Hess collection. I'm not saying you spend $10 million a year. We just did this for easy numbers. But as you're sweeping those pennies, if you can find a way to sweep enough that's 2%, that's going to be significant. And at least with our options here, as we look to sell the pricing management portal, we're not necessarily doing it on a cloud basis. It'll be a one-time purchase. So if you save $200,000 a year, that would be fairly significant. Those pennies, the difference between $7 and $6.86 may sound silly, but you start putting in thousands of cases across the country, that can make a big difference.
Yeah, and I set my own goal at 5%. I want to get to where we can save 5%, and/or there's another layer to this as well. You can start having the discussions about where you're making your best business decisions. If you have a particular item that is selling great in a market, and the universe in that market is double where you are, and you're making a better margin and everybody's happy, but you're forcing in another market the same item's not doing so well, maybe it's Florida with Pinots or something, you can actually start leveraging where you should be moving your volume based on the return you're getting using this system. So that's ultimately where I envision this going, but we got to, again, crawl, walk, run. We're crawling now. We've got to a point where we understand our pricing, we can visualize our pricing, we can see where the money's going. As we start talking about optimization and sweeping the pennies and those sorts of things, we can start having the discussions about, well, look, in these 5 markets, we do extremely well in this item. The retailers are happy, the distributor's happy, they're selling at gangbusters. Working with that distributor, we determine that we can probably gain another 1,000 accounts at a price point. Let's focus our energy there and actually move the budget to that territory so that they have a little more to play with and they increase their volume there as well. So it's having that discussion now. It's no longer anecdotal for us. It's literally we're using information and data to make those decisions. And we're not being, we're not taking a machete to it. We're using a scalpel. So it's a matter of item by item, state by state, making those decisions as we go. And we aren't huge. We have 2 people in my department. We have 20 sales managers across the country. They're in various states. We don't have a pricing department. This is literally, we're trying to do this stuff, pull ourselves up by our bootstraps, be smarter about how we do it. Like I said, using a scalpel rather than a machete. And that's our goal, is to get to the point where we're making those decisions as we plan every year, and it just becomes part of our yearly plan.
So Andy, I really appreciate you taking the time to go through this. It's been a lot of fun working on it with you, and we continue to do so. The next steps of the actual case rate that's going out is something we're working on this week, and excited to get that going. And I know that you guys have been a big supporter of Business Impact. I appreciate your support. Thank you.
Yeah, of course. Thank you. I appreciate it.
Hey, Kyle, do we have any questions? I think I saw a couple get typed in.
Yeah, we do have some questions. Andy, Doug, great job. One, I think, Andy, if you can reiterate, it looks like just types of people at your organization that are using BI, using Target. I know you covered a little bit, but if you can kind of dig in a little bit on, what departments and types of personalities are using Target. Is it just one department or multiple?
We're all over the map. We have myself in my department. I have a business analyst who works with me. We're the power users here. I launched Target in 2004 by myself, built my first cubes by myself. But as we've become more intelligent with it, our CEO uses it every day. He logs in every single morning. He has 4 or 5 favorites that he checks every single day. I've actually set up a daily shipment report for him that gets emailed to his inbox every morning. So at 8 a.m. every morning he comes in and has our month-to-date shipment report, so he knows exactly what to expect this month. So our CEO of finance uses it. They pull data out. They use various other tools as well, but they use Target to dump all the shipment data and the financial data. Our sales leadership, they are all, I would not call them power users, but they're advanced users. They know how to navigate their way around, and all of our field sales have their basic functions as well, and then marketing uses it as well. So we're across the board. We're just adopting DTC data. We've always had DTC look, that's direct-to-consumer for anyone who might not know that. We're now going to actually have granular DTC data that we're launching right as we speak, so that our DTC management can actually see some granularity to their business as well. So it's the entire company uses it.
Okay, and as a segue to that, training-wise, how was, I guess, your end user adoption and training go using a tool like Target?
Oh, it's seamless. We build them. We take the heavy lifting. We build all the dashboards and build the reports for them, and then we just explain to them how to click around. It's not difficult. You can see Doug just clicking around here. It's the whole drill down mentality, and it's the filtering basically as you're going through. We have triggers set up to where if you click on an item, it's going to launch a new report for you to tell you what that item's doing across things. No, training is literally a half hour to an hour. It's not that big.
Okay, so you're basically setting up the environment, and they're able to set up triggers and navigations, filters, so your sales reps, leadership can just go in and dig around and Target, get the information they need.
Yeah, they can get it at their fingertips. They don't have to do a lot of work to get it.
Great. Okay. And we got a question here on the source of the data. Where's it coming from?
From the distributors.
Yeah, the DA data actually comes as a bill from the distributors at this point. Typically the bill is in Excel or a PDF rather, and it will say, hey, we depleted 6 cases of this product at this price point, and so you owe us $6 on the DA or whatever that was. And so that matches up with, we come back here, those match up with the price to distributor and net bottle cost, and also the discount rate. And so those invoices can be one page or many pages. Typically they were going to the AP department. The sales manager would then get it, approve it, and go back. But the AP department wasn't putting them in by type. And so if we go back, and we'll just make a new one here. So the bill would really say there were 4 cases of Mendocino Zinfandel of Arts Lover, and it would say either a $4 DA, or it might say a discount rate of $32.88 or what have you.
Hey Doug, I just emailed you an example of an invoice for California. You can show briefly what that looks like. Yeah, they're just it looks like a dot matrix printout pretty much. It's not a newer technology. But yeah, so it comes in as a PDF and or a fax. We do get some fax invoices, but it's a very basic line by line, and then they transfer that over here. Yeah, I hope that answers the question.
Right. No, yeah, that answers it. And again, for any of those of you that you can type in questions in the question box if you have them there. We'll take a look at what it looks like here, just so you are answering the question full circle.
Yeah, this PDF's quite large, 20 pages.
Yeah, yeah, the first couple pages are some other things, but yeah, that's basically what it is. You would have your deal, you have your discount rate, your chargeback amount, and anyone who does invoicing or is familiar with how the distributors charge us, they'd be familiar with this layout. So every distributor is different. They have different methods. So ultimately, our goal is to try to get this electronically from them so that we can pre-populate the quantities in the PMP before we pay it. And they would just have to check it to make sure that the total matches and all that. Now, that's a step that I would love to get to, and we're going to need some support from the distributors to get there. We've had initial conversations about that, and they understand the importance. What we're trying to say is, look, it'll speed up our payment process. We want to make sure that the depletions match, and then we'll pay the bill. And they're always happy to get their money quicker. So we're trying to dangle the carrot there for them, but we'll see where that goes.
Great. Okay. So again, Andy, Doug, thank you very much. That was awesome. Have a great day. Bye.
All right, you too. Bye-bye.